guest today is from Transrail Lightings. The IPO for the company is opening on December 19th, closes on December 23rd. It's priced between 410 to 432 rupees per share. It's a fresh issue of 400 crores and OFS of 438.91 crores, which basically makes the total IPO size of 838.91 crores. And the company is coming out with an IPO, which has an equity size of 14.46% equity. And joining me is Mr. Digambar Bagde, who is the executive chairman of the group, and Randeep Narang, who is the MD and CEO of the company. Mr. Bagde and Mr. Narang, thank you very much for joining us on NDTV Profit. To begin with, Mr. Bagde, give us a sense of the business that you are in and the revenue stream that you get.
See, Transrail Lighting Ltd has been in the business for last 40 years, and we have a track record of building more than 35,000 circuit kilometer of transmission lines during last 40 years. We have experienced promoters, strong management team with technical expertise and with specialized domain knowledge. We have been growing since last 7-8 years, and if you see our historically, we have been making very good margins out of the business. 40 years before, when I set up this company, the whole objective was to be in the T&D sector. So therefore, you find the name of my company as Transrail, basically transmission line and railway electrification. And the first 10 years, I focused more on the construction of transmission line in various states, Maharashtra and Gujarat. Then I thought that there is a need for backward integration. If you really want to be a long-term player, sustainable player for a long-term basis, then you should have three important things to be taken care of. One is engineering strength for EPC and control on material cost. So control on material cost means therefore we have set up factories for tower manufacturing and conductor manufacturing, which takes care of 60% of the total project cost. And in our EPC, 10% is bought out items like insulators and hardwares, and 30% is the construction is again under your own control. And if you have a very good project management control, then and have a control of 90% of the cost, then you can be a very strong player in the T&D business. And that is why we focused from the beginning. Therefore, during the years, we have acquired highest qualifications by executing 800 kV, 765 kV, 400 kV transmission lines and various complex projects in the hilly terrain and the rivers and all, and in the deserts. And that is why we are considered as one of the top 4 players in the industry.
Mr. Narang, can you come in here and give us an idea of the 400 crores that you are raising in fresh issue? Where are you going to use that for?
Thank you for having us on this call. So we are basically focusing on 250 crores is for our working capital, and 90 crores is for our expansion of our factories, CapEx, and the balance is for general purpose. And we intend to expand our factories based on this CapEx by 25 to 30%, both our towers and our conductor factory.
The FY24 top line was around 4,000 odd crores. You had an EBITDA margin of 11.6%. In Q1, the top line has been 915 crores and EBITDA margin of 13.07%. Where is this expansion in margins coming from, and is this margin 13% and above from core operations? Is it sustainable for in your business?
Yes. So principally, we believe that every job we take, every project we take, we focus on understanding the geography, the risk, the understanding of the terrain, the funding, and therefore we basically believe that we should look at margin-focused jobs. And therefore, we have seen whether in domestic or international in particular, we go with multilateral funding jobs, which is basically the World Bank, African Development, Asian Development. So we are very conscious on the margin profile, and we see that our margin profile last year was 11.77% EBITDA. This is sustainable for sure, And we believe that with the BTC, which is our motto for before time construction, we will be able to sustain it.
Give us a sense of the kind of order book that you're sitting on, unexecuted order book, and what is the timeline for that execution?
Our unexecuted order book as of 30th June is around 10,000 odd crores, and we have around 3,200 crores of L1. Now, the domestic execution will be 18 to 24 months, and international will be 24 to 30 months. So, we are in a good zone. We have orders which will cover us in good stead going forward.
So when you say the L1, it's not part of the order book yet. It's just the L1 and the letter of intent
Yes.
is yet to be awarded to you.
Yes, correct. Our order book is around 10,000 plus L1 of 3221.
Okay. Give me a sense of how big are the international orders and which are the big countries where you supply your or you do EPC work in.
So our big orders are in Cameroon, Tanzania, Bangladesh. We also do EPC, plus we also do product supplies. So we also standalone sell towers and conductors. So these are some of the international jobs we are working on, and we executed them for the last year and a half.
You spoke about Bangladesh. There's been a regime change in Bangladesh, and there's been a lot of issues with respect to payments. What is the kind of total exposure that you have to Bangladesh, and what is the outstanding amount that you have from there? And are these outstanding amounts secured for you?
Yes, the outstanding amounts are secured because we have very good advances equivalent to the outstanding amount. We are working with Exim Bank, we're working with the Asian Development Bank, and we're working with the Bangladesh government. So we see our projects going on time. The regime change has not hampered our progress. In fact, in some cases, we are expediting the job based on the need of the local government there. And we feel that the existing jobs which we have will finish in a year and a half, 2 years. So we are in a good zone of executing. And since 30th of August, the teams are there and we're executing their jobs in full swing.
What is the total exposure that you have there?
It will be around, the exposure in Bangladesh would be in the range of around around 700 odd crores, which is for the existing jobs which we have versus advance, and overall job value we have around 3,000 crores of jobs in hand.
In hand, okay. How is the domestic market looking? Because the domestic market is also coming up with a lot of orders with respect to transmission and distribution. I was reading your RHP. It said that in the next 2 to 4 years, the total capex required or estimated investment required is upwards of over 3 lakh crores. So, what is the kind of outlook that you have for the domestic market, and how big is the have orders started coming in for these investments, Mr. Bagde?
Yeah. So as the domestic market is growing, we will have a very good advantage of building a order book in the domestic business also, apart from what Mr. Narang stated about the international projects. So this will actually take the company to another growth because domestic projects have got very good growth potential.
Give me a sense of how the railway book is looking like, because you said that the intention was to go for transmission lines and railways, but the railways constitute only 2 to 3% of your revenues. So how is the order book building up for railway electrification?
So railway electrification has been very slow during last in the 90s and 20s, 2020s onwards, the railways have started picking up. And we are focusing only on the rail OHE, that is overhead electrification, signal and telecommunication, where the order value is in the range of about 100 to 200 crores. And therefore, the order, so we are actually qualified to bid for the jobs, OHE jobs, but we are focusing more on the OHE jobs, where the order book is today. I can say that our order book is about 150 crores, and we are expecting another 230 crores of orders where we are L1. So I think we have around 500 crores of order book as far as the railways is concerned.
Mr. Narang, I was reading in your RHP that of the total order book that you have, 55 to 60% is executable in the next 12 months. How is that the right figure to go with?
It would be actually 18 to 24 months is what we will be executing the 55% of the order book. And that is on plan as per the contractual obligations we have with various clients. So we are very focused on delivering the jobs on time. And that is one of the hallmarks of our company.
And how do you recognize revenues in these orders?
This is based on the billing revenue, based on the client JMC, which is once they approve it, then we bill it to them, and then it is recognized as per the contractual obligation.
Okay, which basically means that since it is a 18 to 24 months order play, you would need a very high level of working capital requirement. How are you planning to do it, and what is the kind of cash flows that you have internally that can support such a long order book?
So we have, as we mentioned, we're looking at working capital further enhancement through our IPO also, 250 crores. We have good cash limits of 600 crores plus, and therefore we are in a good zone, and therefore this is covering our requirement for the next 2 years.
Mr. Bagde,
Yeah.
there's a state.
During last 7-8 years, we have been managing the cash flow through the internal accruals plus the short-term loans from the banks. And so then we now thought that now the company is poised for the huge growth, and therefore we thought that we should have we should acquire some additional capital from the market. And therefore, out of the 400 crores of primary issue, we have kept about 250 crores for working capital, 90 crores for the adding few machines to enhance the capacities in the existing factories, and 90 odd crores is for the general corporate purpose, again for the growth of the various businesses.
Just to get an idea of it, this company was formed from the hiving off of the assets of Gammon, and now you're again looking at acquiring some of the assets from lenders, from Gammon Engineers and Construction. What are the kind of assets that you're looking to acquire?
See, as I said that we have started the civil engineering business itself in the Transrail Lighting Ltd, and then we have got some qualification issues while we want to quote for the big jobs and the complex projects, and we have to go for a JV when you want to bid for the complex projects. So therefore we thought that we should acquire part of the business from Gammon Engineers and Contractors, only part of the business, like business and tunnels. These are the specialized projects, and therefore we expressed our interest in acquiring that business from Gammon Engineers.